Hi there, and welcome to another weekly general update for the 10th and 11th of December. And the event that we'd been waiting for a couple of weeks now, which was the outcome of the European Summit, has been and gone. So we want to have a look at what that outcome was, and also what the market reaction to it was as well, because I think that gives us somewhat of a guide for the next few weeks and perhaps the next few months. So just the normal general advice disclaimer. Now, the European Summit, I could rabbit on for hours about this, but just a quick one-slide summary of the outcome of basically what's led into it and what the decision was. So on November 30, things were looking pretty grim, and there was a lot of discussion around as to whether a major European bank was about to go under, and I think we were probably very close to a rerun of what happened with Lehman Brothers in 2008. Central banks had learnt their lesson and stepped straight in, and in a coordinated action basically made sure that liquidity was removed as an issue, so that the interbank lending market appeared to be freezing up. The bond market was in an absolute shambles. And so they've removed that liquidity issue and certainly bought some time for other actions to be put in place. So that was step one. Step two is that the summit has not resolved the issue in Europe, which is basically the insolvency of many banks and a few countries as well. But what it's done is put a framework in place for change on an ongoing basis, providing they can continue to get agreement between governments, and that won't necessarily be easy. Then the third step is yet to come, but I believe it's inevitable, and that's that we can expect money printing by the ECB at some stage, because the fundamental issues are not resolved, and I can't see any way that they can resolve those issues without having, to me, they either need to print money or they need to experience a depression. And whilst Germany is dead set against printing money at this stage, I think they'll elect to choose a higher level of inflation rather than to go through an extended period of recession or perhaps even depression, because to me they're the only permanent solutions. Otherwise, they just dribble along in a kind of a no man's land for a couple of decades, as Japan has, and perhaps as the US may do as well. So I think that's coming. I would expect that we're unlikely to get money printing unless markets really start to look ugly again. So I don't think we're going to get money printing while markets are buoyant. But I think there'll be a point where if markets do start to sell off again, then we may see that kick in at that point in time. So ultimately they're going to go for the inflation option, is my view. Let's have a look at the action for the last week. The S&P finished 0.8% higher overall, but it was a little bit volatile over the last couple of days, Thursday and Friday, so traders were really quite nervous about the outcome. And the market, in particular on Friday, swung backwards and forwards, the futures market, quite a lot. Now, on the S&P, all but one day butted up against the resistance level at 1265, and we'll have a look at the chart of that in just a minute. And then there was a one day down to correct the overbought conditions, so we'd had a very sharp rebound that smashed back through the 1220 level, took out a number of important Fibonacci levels, and rose up to what is the 200-day moving average at 1265. So it was overbought short term, so we had a one day down correction, and then that all got recovered on Friday night. And I think now, to me, the overwhelming odds would favour a rally into Christmas. The ASX 200 closed down 1.9% on the week. Did a little bit worse, but I think that's more of a timing issue because we didn't really have the benefit of the European outcome on Friday. We'll rebound on Monday, probably not by 1.9%, but we will rebound probably about 50-60 points on Monday, so that will recover that most of that loss. Gold closed $35 lower on the week. but really is still caught up in this triangle that I've been describing over the last couple of weeks. So to me, it was just one more week, one more step in resolving the triangle before we break higher, and I would expect that's going to happen pretty soon. I'm looking at probably about 1680 now as being the low, and we'll have a look at that chart as well. Silver was slightly lower on the week, and other commodities stayed solid. Copper had a nice rebound on Friday night, so the commodity space really looking a lot better than it did a couple of months ago. So just in general, the actions to take, there'll be more specific actions described in the actual members updates. But I think we can expect a generally higher push into Christmas. Certainly the technical patterns support it. It won't be straight up because I think traders will question on a day-to-day basis whether the summit actually did achieve enough. But I think the general direction will be up, but expect it still to be volatile. I think the key thing is that fund managers now don't have to worry about a major downside move. So I think you're going to see more funds committed running into the end of the year because they're not looking over their shoulder to see if the market's going to fall over in the next couple of hours. They'll want bigger bonuses. I know that there's an awful lot of cash on the sidelines, and so I think that you're going to see that money come into action. The other reason is that many quality stocks around the world are cheap and they're in great shape, and if you remove the threat of a financial meltdown, then they really do look attractive. So the actual actions we'll be looking to take, we'll be looking to trade the ranges at the very least. I don't know whether we'll get a significant trend, but I think we'll get a volatile move upwards that should at least allow us to trade the ranges, particularly on some of the bigger stocks. And also looking to short sell if the market gets a little bit overbought as well. And gold producers, of course, will do best. We've already seen a few do exceptionally well. There's still a lot of other stocks that can join in yet, and I think we're just at the start of a major run higher for maybe the next couple of years, and we're going to see quite a few gold stocks go up of the order of 500% or 1,000% or even more over the next 1 to 2 years. So really some huge potential gains in the pipeline. So let's go over and have a look at the charts. So we'll start first of all with the S&P 500 index, and I'll just pan back and have a bigger picture look. So you can see we've really had a big consolidation pattern. I'm still of the view that we're in a bear market overall, that April here signified the peak of the market. However, I may be proven to be wrong on that. But one thing you'll notice here, at the bottom of these three lows, the first one on the 9th of August, the second one on the 4th of October, and then the final one on the 28th of November, and I've marked on here what the volatility index, the VXO, which is the volatility index on the S&P 100, and you'll notice that that the volatility index has been decreasing at each subsequent low. So the volatility index in August was at 50, which is an extremely high reading. Dropped slightly into October, but it wasn't any worse, despite the fact that we actually formed a lower low on price, but the volatility was slightly better. But then coming into November, you can see the volatility had dropped quite a bit, even though we'd had a pretty sharp sell-off. I think we had 7 days down in a row, but the volatility index was actually at a lower level. So that's indicating to me that the selling pressure is coming out of the market, and at least we can look to a rally into Christmas. Let's just have a look at a weekly chart. It's not going to play ball with me, so I'll leave that weekly chart. Now, okay, here we go. Let's go back and have a look at the weekly chart. There we go. Now you'll notice that we've got two moving averages on here. The blue line is the 15 period. I think this is weekly. No, sorry, this is a monthly chart. So the blue line is a 15 period or 15-month moving average. The red one is a 10 period moving average. And you'll notice that despite the decline in the last 4 or 5 months, that we still technically on a big picture view are in uptrend. The shorter term moving average is still above the longer term moving average. The price sitting around about on the moving averages at the moment. So from a monthly point of view, big picture, the jury's still out on the S&P. Now let's have a look at the two pathways. I went through this last week. There's two possible pathways, and I don't at this stage know which one will prevail. You can see we've formed up a big triangle pattern here. I'm expecting that we'll get a push higher into Christmas, or at least leading into Christmas, with the upper limit to that push higher at the moment around about 1310. It may well push up if it's a bit weaker, and it only pushes up to about the 1290 mark and then declines and breaks through this lower trend line, which at the moment is sitting at about 1210. But frankly, any break of 1220 is important. So a break below 1220, I would expect that we're probably going back into the bear market phase, and that will probably prevail for a few months. So 1220 is the key on the downside. The other possibility is that we are now at the start of a new bull market within the overall bear market. And for that to play out, I would expect that markets would probably push higher above 1300. I would then expect a bit of a pullback, so this may occur in the new year. But as long as it holds above the 1220 level and then starts to head up again and breaks above this upper trend line, then that would signify to me a new bull market that would probably last for several months at least. So they're the two outcomes. The bottom of the range, we want to stay above 1220, and we'd be looking for a breakout above probably 1310 as to signify that we're into the scenario 2. So we'll just have to wait and see. I think the indications that we'll get, the strength of the rally over the next couple of weeks, to see if we can only scramble up to 1290 or whether we've got more strength to perhaps head up to 1310, will tell us a little bit. So the next couple of weeks are really important for the market. I think particularly the next week as well, and that'll give us an indication of what to expect early next year. Now let's just have a look at the volatility index. And you can see we've had an enormous period. 30 on the volatility index is a pretty key line in the sand. We've been above 30 all but a few days since basically the 4th of August. And that's an extraordinarily long time for the volatility index to have stayed above 30. But you can see that quite clearly it's trending down over the last couple of months now. We've got lower highs and lower lows in the volatility index. So it looks like that volatility is easing off. Okay, now let's have a look at gold and silver. Here's gold on a weekly basis. So we had a down week this week. We're still resolving this triangle. I would expect that it'll probably resolve out in the next couple of weeks and then almost certainly going to head higher. You can see on the RSI the gold on a weekly basis is pretty much oversold. So a move higher would certainly make sense. Let's look at it on a daily basis, and you can see very little movement last night. And just to check on silver on a daily basis, it's really doing the same thing. It's just going sideways in a big consolidation, and it will follow gold. And similarly, the Aussie market. So we're just tracking sideways at this stage. I would expect if the S&P pushes up to the 1290 to 1300 area, we're looking at about 45.50 is probably the limit for me. If we break above 45.50, then I think we've got a much more positive market on our hands. So that's probably the upper limit for me. So that's really a summary of where we're at. I'm looking at higher prices for the stock indexes. I'm probably looking generally at higher stock prices. Gold may just continue to track sideways for a few more weeks, and before it heads higher. And importantly, we'll be watching those boundaries on the S&P. So that's it for this weekend's update. We'll see you next weekend. Cheers.